way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Check us out on the website at TFNN.com and on live inside the eSignal platform, as well as on your mobile phone at TFNN.mobi. Let's check out where the markets are at right now. We got markets sort of oscillating around positive, negative territory right now. The S&P is currently up a point. The Russell's down. Let's see, 0.5 right now ticks there, or half a point. We got the NASDAQ down 5 points. Dow just went back into negative territory, down 15 ticks on the day. Looking on over at copper. Copper is currently down about 2%. So some big moves there in the metals, along with gold being down a little over 1%, and silver is down 2.5% on the day. We got oil is currently up 44 cents, but that's after pushing on down pretty deep there. Let me make sure. Got X4 in there. Let me change that up. There we go. I was like, that ain't right, because I know it's a whole lot further down. Little error in the Thinkorswim platform. Got that fixed. About $1.44. I'm like, wait a minute. Yeah, so pushing on down to 56, going down towards that 50 number. Saw some stories, OPEC being okay with as low as $40 to $50 a barrel. So putting the squeeze on the bull market there. Also just on a lot of oil companies and everything else. And then it's a lot of impacts on the economy with how oil is doing right now. We got natural gas. It's currently down 1.5%. Corn up a couple points. Soybeans down a couple points. We got the pound down 65 pips on the day. Euro dollar is currently down 21. Euro pound's up 18. Dollar frank's up 16. U.S. yen is down 72. Euro yen and Aussie yen flying down. We got the Euro yen is currently down 93 pips. The Aussie yen down 95. And let's see, let me add this one in. They got the pound yen is down 200 pips on the day. Massive move there. Aussie dollar down 29 pips. Bond slightly positive. King dollar slightly positive on the day. That gets you your lunchtime market wrap. Some news going on right now. Dollar erasing a lot of the advances against the Euro's crude oil continues to move on down. European shares getting hammered pretty hard with oil slumping and causing deflation fears. The S&P 500 finally pulling back, slipping back below that 200-day moving average for the first time since October 30th. Let's look at that real quick. Pull that one up on a chart. And let me just maximize this. And we'll go in and look at daily chart. Pull up the S&P. Let's go into our studies. And let's just remove all these. There we go. And go back in and do a moving average on here. Let's see here what we do on the moving average. And let's see, where do they have that one at now? Let's see, it's probably either simple or SMA. There we go, simple moving average. Add that in. Let's change the setting. Put that back up there. They've moved, they've changed up the platform. There we go. Okay. And then change that out to a 200 period moving average. There we go. And apply that, put that on the chart. So I got ES, it's not there. I'm trying to figure out which one is this from. Maybe we're going to SPX or SPY. And it's not below the 200 yet. So I think they're jumping their gun. It's moving towards it, but it's not quite there. And let's see here. But yeah, 200-day. Oh, intraday. Okay, 200. Oh, below 2,000. Okay, so yeah, they're basically saying it's heading towards the 200-day moving average, which it is. And obviously it is... It's dropped on back 2,000 since back in October was the main lead story. We haven't been back below the 2,000 number over there since October. All right. So, but yeah, just obviously a key important level, and the market's now 10 points below that 2,000 number. We got oil hitting a 5-year low after that, little mini, I guess you'd call a mini rally. but pushing on back down, and even further on down there, low 55.87 today, and had to really pull some a lot of depth in charts back there. I don't know if we can go even far enough back. Let's see if we can get this thing far enough back. We'll go 10 years. Let's try to look at weeks. Yeah, we can't even get this thing to load far enough back to see all the data. But basically, massive lows right there, 5-year lows, and pushing on down pretty heavy. Natural gas gaining quite a bit, getting ready for the cold. Natural gas usually moving on up this time of year, but I mean, not just a massive move, but let's see here. Let's dive into the current day. And we can see it drop down. It pulled up. It pulled on back down. It's starting to pull on back up right there above that average. And looking at 3.739 on the moment. But it'll be there's a lot of volatility. There's this big gap we had right there on Friday going into this weekend here. But we got expect a lot of volatility in natural gas this time of year, and can add more to it. Of course, it's pretty much almost always volatile, but even more so right here in the wintry months. Things to remember, U.S. indices have rolled on over to the March contract. Make sure if you haven't done so, you do go in. And if you're using, say, the Ninja platform, what you want to do is you want to go over here to Tools, and then you want to go into Instrument Manager. You'll then find your contract, such as, say, the S&P, and you right-click, and then I already have it on there. You left-click, and then so the right-click there and the left-click. The little arrows right there. It'll add back in the current month. You'll see it's the 3/15 contract. Nadex is also rolled over on that. Now, Nadex did roll over. They either roll over like the Monday before or Monday after a futures rollover on most contracts. I'm about to give you an exception on that. But so they did roll over oil like the Monday before. Oil's in the process of rolling. And to show you what I mean by when I say in the process of rolling, it's when traders start to trade a different month and start putting that volume towards it. So we can see some of that over here. It's still pretty heavy on the January contract. But if I go into oil and I look at, the quotes coming in, like a little delay, but just so you can see it, it's about a 30-40 cent difference in January and February, but there's like 120,000 contracts versus 292,000 contracts. What will happen is this February number, is going to get larger and larger all week and eventually overtake January. And then next week, January will drop drastically, and February will be in that 400,000 contracts a day territory. But that is in process. Again, Nadex has already rolled to February. The futures will roll here by the end of the week on oil. Other rolls that are in place, we got the DAX, the FTSE, and soybean. Nadex is rolling those over tomorrow as well. So just make sure you're paying attention to that if you're trading those over on the Nadex derivative platform of those futures markets. And so, but roll's pretty simple. Nadex can't roll on the exact same date as the future because it's its own exchange, sort of a copyright thing. Can't roll over the exact same date. And also, they usually try to roll over on a Monday if they can. If they can't, it's due to how the liquidity works. And they'll post something up where you can check that out. But just make sure you're always paying attention to the contract when you're looking at it inside the platform to see like what month it says on there. So if you see like where it says silver March, gold February, that type of thing, make sure you pay attention to that month inside the Nadex contract when you're looking at it to make sure you are looking at the right chart. Let's see here. What do we got going on? Other things that are new and live and up and running. We got the 5-minute contracts now live inside the Nadex platform on FX. So they've launched on out. We got 3 ticks wide on Eurodollar for the strike width, the difference between the strikes. We got 3 on pound dollar. We got 3 on dollar yen. And we got 4 on Aussie dollar. And so they actually do have some decent pricing here. You can see, 29, 49, 79, So they're actually, they made them narrow enough where, if the market is in the center, there is, obviously at the money, out of the money, in the money type thing. Of course, if it's, obviously deeper in the money, there'll only be 1 or 2 contracts there. But they're, doing good on their pricing and consistent there on their liquidity. They're refilled after about 30 seconds if you take out the book. And, keeping things in check. So definitely check those out. Like I said, they're every 5 minutes. They officially launched this morning at 9:30 for the 9:35 a.m. expiration. and they will be trading around the clock from 6 p.m. With the first expiration at 6:05, all as late as 4 o'clock the next day. So, about 22 hours of tradable choices there. Also, you can use, the tools, like you can go on there and you can hit refresh and click the link again and again and again, or you can simply use the scanner if you want to check these out to make it a lot easier to trade these 5-minute contracts that are always coming on up. So if you did want to do that, how would you do that? What would you do? You'd hop on in, and you'd pull up the scanner. Let me pull the scanner up. I'll show you what I'm talking about. We'll go in here and we'll look at it. And right over here on the binary scanner, you're going to, choose live or demo, whichever one feed you want, because they are a little bit different, okay? And then, especially because people can go in and do things on demo. Make sure there's no filters, and just bring the thing down to, say 15 minutes. What that's going to do for you is let you see, and I'll also choose the market. So Aussie dollar, Euro dollar, pound dollar, and dollar yen. Those are the 4 markets they trade on. And now it'll constantly feed in. You can see all 4 markets that have to click between each screen, each market, the 5-minute contracts that are trading. And you also will be able to, it'll auto-refresh. It'll pull the new ones in, put the old ones up as soon as they're listed. So it'll pull these out, put the new ones up automatically for you. And they're quoting to around 30 seconds right now. So as far as how late into the hour they're quoting and how those contracts work. But if you're looking for some very fast-moving contracts, which is why you'd want to trade these. You want that speed. You want to get, quick directional pop. Then that's where you take advantage of them. If you want slower trading, 5 minutes are for you. But if you do want that faster trading, you only have a little bit of time to trade, and you want a lot of trading opportunities, then 5-minute contracts definitely are going to give you a lot more opportunities than, say, an hour or 2 hours a day that you might have, or a 30-minute lunch break, or, whatever it is. Whatever way you like to trade, it'll give you a lot more chances to do that. And you have 4 markets, so you can focus on 4 markets and focus on, shorter-term trading signals in that process. So anyways, check it out if you haven't done so. And I think you'll be pleasantly surprised if you've been waiting on this. I know a lot of traders have been just really dying and waiting on these things to come out because they've wanted to take advantage of them and use those shorter-term contracts. So again, they're live as today. By the way, there's no strikes at least this week at the end of the hour. So the last 5 minutes, they don't want the strikes to cross over. They may change that up next week. But basically, so for the first 55 minutes, there's 5-minute strikes. And then the last 5 minutes, you'll have your normal intradays or dailies happening. All right, there. We'll do that right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And checking out a few things right now, looking at where the markets are right now. I think we got that tick fixed. But we got some more contract coming on through. One thing I wanted to go over just a few tips for you on these 5-minute binaries. Like I said, they are live as of today. No strikes at the end of hour. There's different ways to trade them. You can trade them directionally. You can scalp them, which is probably more on the level of what I would recommend doing, going in and trading them, where you're going in and going, you know what, I will be happy to, take these trades, but I don't want to stay in them when they're really close to expiration. So, look, I go in and I buy a contract for $20. I can get out at, say $40. I go in, set your take profit, get out. Don't hold on to them. They can move so fast in your favor, which is great if you take the profit. But if you don't, they can move just as fast right back against you, and then you end up having a profitable trade turning into a losing trade. Big thing, be sure to, go in and look at, other strategies that we've talked about, strangles, things like that. I'll be talking about a lot of that more next month. Probably do some of those trades live on the air with you as well. Make sure to demo trade these. Don't just jump in live. Have a good handle on them, get them down. And once you got that down, then, obviously, slowly move into live and just keep your risk management in check at all times. But, learn on the demo. Don't go, oh, it's not real, so I'm not learning. It's like, well, then you're gambling. Learn on the demo, okay? And just, get down where it's very muscle memory, trading, not just, gut feeling trading and just seeing what happens. Again, these are great for part-time traders. Some of y'all can only trade at night, an hour in the morning or, half an hour at lunch, whatever. 5 minutes, obviously you have the time to do the trade. It's going to expire. You're not going to be stuck in the thing, having to, monitor it and babysit it. So just this last month, I mean, Nadex has added a lot of new opportunities. You got the 20-minute binaries on the indices. You got the 5-minute binaries on the FX. And so a great time to really, hop in there if you haven't done so already. We talked about rollovers. You got to have that covered pretty well now. Let's go in and let's check out some of our news trades. We really didn't get to cover this week that much in detail. So let's talk about that and get that plan knocked out so you're ready for the week. What I see over here, I'll pull up our calendar. We'll pull up the FX factory. And we talked about, I think we had one trade for the day that we put on our list. And pretty quiet beyond that. And let me just pull it up and we'll walk through that one with you. Right over here on the 15th, we had the Frank PPI. Also, we had an AHB housing market. And so let's look at both of those and put them up here. Give me 1 second. And I'll open up just a real quick chart for you. And we'll have that all set and ready. And then we'll also walk through the week of the news trades and what you want to be looking for this week, expectations, even just to be aware of. Even if you're not a news trader, again, just to be aware of those trades that are out there so that way, you don't get caught off guard. All right. So we got dollar franc. And opening that one up right here for you. What we were looking at was the PPI report being at 315. And we were looking at entering the trade as early as 11, going to as late as 7. So we go over here, we take this trade, start off right over here at 11 o'clock, and take this on out to 7 o'clock. And we get to move about 7 pips. We did have a nice little move down, move up on that trade. We'll get for about 35 pips potential profit on the trade for an iron butterfly. Going on over to the housing market, iron condors, that would have taken us into the euro dollar. And so let me pull that one on up for you. And looking for about 30 pips of movement. And seeing if we stay inside that movement, then of course it's a profitable trade if we're able to pull that off. We did have some decent movement this morning. But let's see if that impacted our trade. Sort of had a little, rocket move right there at 11:30, where you see the market shot up half deviation right back down to some really fast moves. And just use some caution, be aware of some of this crazy stuff that happens during this holiday trading time when liquidity can get a little bit lighter. Looking on over from 9, taking that to 11 o'clock, and only getting 10 pips. Looking for a 30 pip or less. So or less is good on that trade, working out well on the U.S. NHB housing market. Report that came in a little worse than expected. Expectation of 59 and an actual release of 57. So stay there when we get back. We'll cover this week. We got Fed funds rate, some other exciting news reports this week to go over with you. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome back here to the Diagnostic Trading Hour, looking at the news for the week, so you can be set up and ready and aware of each of it for your own trading, as well as potential news trading if you want to take advantage of the news on Nadex, or even if you just for trading directionally, just to know what kind of movements to expect and when to not be caught off guard. Looking at the pound dollar for tonight, we got a release at 4:30 a.m. in the morning coming on up. We're looking at an 11 p.m. entry with a 7 a.m. expiration. Having quite a bit of reports come out. Usually don't get a lot of volatility out of this, but we do have this up at 35 pips as the average move expected. So we're looking for that as our minimum profit on the trade on a iron condor. It's where we buy the lower spread, sell the upper spread. We got the PPI, CPI, PPI input, RPI, core CPI, HPI, and PPI output. A lot of small trades, but all adding up to add in a little bit of volatility. Hopefully get us enough implied volatility in there to really get that trade on. Tomorrow morning, we're going to have the CAD manufacturing sales coming on up, and also the foreign security purchases. And that will happen at 8:30 in the morning, giving us a setup for an 8 a.m. to 10 a.m. expiration. 8 a.m. entry for 10 a.m. expiration on an iron condor, looking for a minimum profit of $25. We got U.S. building permits coming out at the same time, setting us up for a euro-dollar $30 minimum profit on that iron condor. Again, 8 a.m. entry, 10 a.m. expiration. That evening, Tuesday evening, tomorrow night, we're going to have a straddle set up. We don't have a lot of these, but a pound-dollar straddle. We're going to have the asset purchase facility votes and official bank rate votes. They'll be released at 4:30 in the morning. Looking for an 11 p.m. entry with a 7 a.m. expiration, and of course, setting those take profits after you get in when it's a straddle, just in case it pops up and flies back. And going into Wednesday, we'll have CAD wholesale sales coming out on a dollar CAD, on the CAD there, and we'll be looking for a dollar CAD trade for 8 a.m. entry, 10 a.m. expiration, 35 pip minimum profit. We'll have a variety of CPI, core CPI, and current account happening in the U.S., giving us a euro-dollar iron condor trade. We get entering at 8 a.m. for a 10 a.m. expiration, at $30 minimum profit. Don't forget we got weekly oil inventory, especially with the oil the way it's been. We'll make that probably even a little bit more, crazy volatile. So we look for some potential trades on, implied volatility, see if you can get some really wide, strangles or straddles. Iron condors or butterflies, or some narrower strangles or straddles right in there. And we got FOMC Fed funds rate coming on out. Usually we can find iron condors on these going in, and we sort of list off a variety of potential trades that you can do on these. But usually they're pretty wide, and we don't have all the normal stuff here. But to get this, looking at the 11 to 3, I'm going to go through a whole set of series for you. For 11 to 3, euro-dollar entering as early as 11, for a 1 o'clock expiration for $50. And so, but we set these up in such a way where you can go in and you can trade them even like before, especially 30 minutes before, hour before, all that. But pretty much $50 on euro-dollar, pound-dollar, and dollar-franc. Now, some other ways they can be done is like, say, 90 minutes before. And let me see here. Let me make a note. Right there. All right. So looking at that 1232, this is going in 9 minutes before. Basically trying to see if there is some IV in there that you can take advantage of before the Fed funds rate comes out. I usually like to be out of these, by the way, a few minutes before expiration because they can get a little crazy in those last couple minutes, especially if I'm close. But Aussie dollar, usually things are basically most markets are usually flat ahead of FOMC. So don't be surprised tomorrow night into the afternoon tomorrow to not see a whole lot going on, but especially right before that hour or two before things really flatten out on Wednesday before the FOMC comes out. But Aussie dollar, we're looking for about 25 pips, euro dollar about 35, pound dollar 40, and dollar CAD we're looking at 30 pips. Dollar franc, we're looking at 40, and dollar yen, we're looking at 30. Again, this is getting in 90 minutes before the FOMC comes out. So trying to take advantage of that flat market before the FOMC is launched. And, maybe you missed an opportunity. Maybe there's some more 60 minutes before there might be a better lineup. You never know. Sometimes the IV just comes in and sets you up for a good potential trade. Looking on over at 60 minutes before, Aussie dollar, we're looking for 20 pips of range of movement. Euro dollar, we're looking for 30. Pound dollar, looking for 35. Dollar CAD, we're looking for 25. Dollar franc, we're looking for 30. And the dollar yen, we're looking for 25 pips of movement range. So therefore, basically, that's our minimum profit we'd like on an iron condor if we can get it. Sometimes it's there, and sometimes it's not. So this is more to be aware of the potential movement during that time, be aware how small it is, and see if you could possibly grab it. It doesn't get that much smaller in the last 30 minutes. As you can see, that's a lot of times that extra volatility may come from. We got 20 pips on the Aussie, euro on 25. Pound dollar looking at 30, dollar CAD looking at 20, dollar franc looking at 25 pips, and dollar yen looking at 20. And that's just in the last 30 minutes. So you can see that you don't get a massive change between 60 minutes and 90 minutes, but literally about a 5-pip drop on that. And if you go back, you do see it a lot more if you're looking at, say, the 90 minutes, like 25 and then 20, and then it drops on down to 30 minutes. Really very little difference. Some of the pairs don't even have a difference in the last 30 versus the last 60 minutes before FOMC comes out. And looking on over at the Euro final CPI, final core CPI, a release at 5 a.m. On Wednesday. We're getting Iron Condor for entering at 11 for an expiration of 7 and a minimum profit of $35. And then let's see, so that covers the Euro final. We get the Franc trade balance news release coming out at 2 a.m. on Wednesday. Lots of news on Wednesday. Another Iron Condor, dollar franc 11 to 7, look for $35 minimum take profit. And the pound dollar being released on Thursday at 4:30 a.m. So we're going on Wednesday at 11 for 7 a.m. expiration. Looking for a, again, entry for 11 for 7 a.m. for a $35 minimum profit on that trade. Again, an Iron Condor on Nadex, buying the lower spread, selling the upper spread. Let's see, going on into the, looking at the 18th. And like I said, it's getting this week's news report set up for you. We got the U.S. Philly Fed Manufacturing Index and CB Leading Index at 10 a.m., and we'll be looking at that. That'll be a release. So we're going to be looking at a 9 a.m. entry for 11 a.m. expiration. So a little bit on the odd hours here. 9 a.m. for 11 a.m. expiration with a $25 minimum profit on that trade. And, of course, we'll have 8:30. We'll have U.S. unemployment. And a little bit later in the day at 10:30, we're going to have U.S. natural gas inventory reports coming on out. Friday, wrapping it up with a few various reports, core CPI, core retail sales, CPI, and retail sales out of Canada. So that dollar CAD trade sets us up for an 8 a.m. to 10 a.m. iron condor with a minimum profit of $30 that we're looking for to be able to put that trade on. That gets you your basically all your news for the week, gets you all set up. You can follow along, watch out what those expected numbers are. We'll be reviewing those trades throughout the week for you, okay? But, you can go back and you can replay the show, catch up on all those numbers if you missed any of them. I know there's quite a bit of news just in that one section. If you don't remember, how do you do an iron condor? And this is something that, I try to review from time to time with you, is we're going in and we're doing them on spreads, okay? So you go in over on the spreads, and what you do is you try to find a spread. So let's say we were doing oil or, whatever you're maybe doing. Go in and choose, say, oil. And what I do to make it easy is I try to find a straddle and then just turn it upside down. So say I put on, we can do that. We can even do small cap. We'll just look at a few of them and see if we can find anything that looks good. And if I can, then I'll put on a trade. Let's see. We got a lot of movement right now, so it's going to be a little difficult. But here's I can at least draw the concept on the chart for you. And this is really way past the time that we usually do them. But we go in here, and what I do is I buy a spread below the market. So let's say, we're about ready for the news. We're about ready to get in. And I buy a spread that's good for, a few hours. But I buy one below where the market is. Okay? And so we'll go in here. We'll just make this one green. And then I sell a spread like the upper spread. And you'll notice over here on Nadex, if I go in, I'm like, let's just give me some, small spreads. Then what you'll see are, if we can find a good matchup down here. Okay, so we got that one, and let's say we go down here and we sell one. If we find one that will line up for us. It's a little bit closer. There we go. So that's a straddle, where we're buying the upper one, selling the lower one. This one, we're going to be buying this one and selling this one. So you see that little area right down here? Like this would be where you'd be losing on a straddle, okay? Well, we want to actually, hopefully it expires inside that area and we make money on a iron condor. So it's just basically a straddle in reverse. And so if we sell this upper one, we go in, we'll say we sell this one, okay? And let's say we, sell, let's say the market's at, let's just say 24.20. Let's say we sell at 24.40. And then say we buy down here at 2400 as an example. Then we can make 20 pips on this side as long as it expires above this green line. It's basically make a pip every tick above this line where we bought that it expires. There's 20 pips of potential profit there. There's 20 pips of potential profit here. If it expires in the center, we'd make all 40. We obviously don't expect that to happen a lot, but it could move 20 pips higher, and this 20 pips would cover a 20 pip loss on the one we sold. Or it could move even 20 pips lower than where we bought, and the 20 pips on the one we sold would cover 20 pips on the one we lost, so it could be like an 80 pip wide iron condor. So the idea is you get really wide ranges where you're at a break even, and really, really wide where you're at a 1-to-1 to like max profit to, like say max loss if you use a stop. So it gives you a very wide range to do an iron condor, whereas usually you have to have a high risk. You can actually have a good 1-to-1 risk-reward ratio with a very wide intraday range pulling these trades off. They take a little bit more to get used to understand, but if there's 40 pips, maybe you make 20, maybe you make 30, maybe you make 10. But when you lose, you probably lose 10, 20, 30. So, and more often than not, the markets do stay more inside that range. They don't just fly all day long on a day-to-day basis. And I like to focus in on news because that gives me a consistency of when that currency pair is specifically reacting to a specific news announcement. How does it react to that news announcement over the course of the last couple of years, last 6 months, last 12 months, last 24 months? It lets me see that specific reaction to that specific news, which causes its own implied volatility from the expectation on that news. So that's why I like to trade them on the news. But that's pretty much the simplicity of an iron condor. If you buy 20 pips below the market, sell 20 pips above the market, well, you can make 40 pips if it expires in the center. And if the closer it gets to one or the other, you're making one tick less than $40 until eventually you have to go past it where you're making, it's going down, down, down. So basically you go up 40 pips or down 40 pips and you'd be break even. That's an awesome thing. That's an 80 pip wide range. And it'd have to go, up 80 pips for you to lose 40. Because you'd basically be at break even at 40 up, and then you'd lose 40 on a 40 pip max profit. So had to move 80 pips up for like a 1-to-1, 40 pips up for a break even. And that's basically one of the best trades you can find out there. If the IV's there, if you can find the trade, and it's not always there, but, it's worth looking for to see if it's there, and no matter what, you at least have an idea of the expected move when that specific trade comes out. Some other thing we can go and look through is check out where the markets are at right now specifically. Looking over here, we're looking at some shorts on oil today, and it moved on down, 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 down. Worked out pretty well, hit both targets, was looking for it to break down to really confirm that just after some of that volatility we've had lately, and had some shorts going on into that process. And moving on down right now at a 0.7, actually busted through a 1 deviation level right down here at the 0.7 already because it moved up some first. So it's really a 1 deviation move, from high to low. And as you can see, oil sort of chilling out at the moment. Let me go in and pull up a couple other charts, and we'll just walk through them. See, let me get rid of some of my drawings over here. And we'll walk through some of the expectations of movement and where markets are at. And it's really helpful. I post these deviation levels for you, inside the scanner. Post them every day. I'm trying to make it as easy as possible for you to get an objective method. These are not historical movements. These are future expectations based on the actual implied volatility of that market's underlying options. So I extract that implied volatility. It says how far does the market expect the market to move. And then when you have whatever directional bias you use, whatever method you like to use, then you're able to use that to go, okay, well, I do expect the market to go long, but did it go as, did it go where I expected it to go? And then is the move over? So yes, I have a long, yes, I have shorts, but how much further do I expect the market to go? Well, not too much further on this specific trade. So looking at those specific levels, let's pull up and just scroll through a few markets to show you what I'm talking about. And we'll do that here in the last section. Okay?
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we went back here to the Diagnostic Trading Hour and just looking over deviations at the moment. Checking out where the markets have been going. As we can see, Monday we went ahead and Friday, we went ahead and ran on up to a 1 deviation level for pulling on back. And today, pretty light, but still did have a nice move up there to 95% of a high to low deviation move that we hit right there around 5 a.m. So right down here, hit that level. It bounced off of it a few times before the market turned around and flew on back up. And so this, you always want to be aware of those deviations are, no matter what system you're using. One I designed, one you designed, one somebody else designed. Just be aware of those deviation moves because they can really give you a heads up that this might not be the best trade because usually markets do bounce off those deviations. We got some big moves on pound dollar today as well. Let's go ahead and pull that one on up and check it out. Over on the pound dollar. And see, we got a little bit larger than expected move today. Popped on down to the 1 deviation. Did decide to pop back down to 1.5, but look what it did. It popped right on back up. So it didn't just keep going and going and going. Granted, it got a nice little extra punch through there, but that's not necessarily what you want to be playing, day after day after day on the moves whenever you're looking for an expected move and how much further should I expect the market to go. And at least gives you a line of, okay, if it does keep going down, probably want to tighten my stops at that 1.5 deviation point. Looking on over at a dollar CAD. Had a little bit of activity last night, and so we'll pull that up. We'll look at it. And flew on up this morning, and where we sit now right now, we're sitting at 1 deviation. So you got a little pop up and came on back down last night, but turned around and again moving up to that deviation move on the day. And sort of hesitated right here, 0.5, 0.7. Also became a 1 deviation high to low on it before giving it just one last little ump. But again, tightening their stops as you go on up. And one of the methods I've talked about before is when you get into these, when you basically close above a deviation, tighten the stop. So let's say you were long, go in there and tighten that stop right there, okay? Because that bar closed above the 0.5 deviation level. Then when we close out again above here, right here at 11, we close above the deviation, so we tighten our stop again. It comes on up, see how it stays right there? Then it comes on up, closes right above the deviation level again. Tighten our stop right here, and sort of popped down, hit that, went on back up, came on back down right to the same point. And so it's a, can be a very effective, simple way to trail stops on trades that you're doing. We got some interesting volatility today on the indices. Let's go ahead and look at those real quick. Popping on over to the S&P right now. And look at that move down and then back on up. We had a, basically a deviation move last night on the up and down movement. It popped on up, half a deviation, pulled on down this morning from high to low. Solid deviation move, bounced right off 0.5, bounced back up to settlement, and just chilling out there right now. And so just a very simple 1 deviation high to low move. Again, being aware of those high to low, especially whenever they're oscillating like that. Going on into the Russell, and then of course that most powerful deviation level being settlement. And pulling right back into that. Let's check out the Russell, what it's been doing, and get that one opened up for you. And then of course we'll pull up oil as well. And Russell, basically the same thing. So deviation high to low, bouncing back up right up to settlement, and then coming up down off of that. We're running on into oil, so whichever oil contract you're on. Front month right now is January. Nadex rolled over to February, and but we're seeing that it moved, up a little bit and pulled down again to a deviation move, even on oil right there, just sitting flat, right out of 1 deviation high to low. So, use those expectations. They'll help you out. You'll have a great day, and I will see you next week here on the Diagnostic Trading Hour. Thank you.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.